Welcome back to the Market Wolf, where I give you my opinion that has been incorrect for about 3 days in a row now, and the wolf is not happy at this point. And that means we have to give you a different way to think about the market. It's time to embrace that wolf and look at the market differently so we can sniff out and detect exactly what is going on here. Because it is unacceptable for me to be wrong on the point-to-point daily. I'm glad I'm not day trading, because if I was, I would be wrecked right now. I am playing a longer-term case, and I believe my longer-term case is still correct. You can see that in the purple here, I've essentially told you that we were going to be flagging between the 413.40 and the 418.12, and that we could also drop down between the 409.13 and the 413.40. We have done both of those things. In fact, on the daily candlestick today, we have been in both of those areas. Now, the call I made yesterday, I said very decisively, based on the volume that I was looking at, it looked like we should truly roll over and at least visit, I told you, 402.02, but I thought we had to double bottom at 398.19. It is very possible, since we spent so much time in that area, so many days, that really we're all bought out of that area at this point. That is entirely possible, and that this new accumulation zone up here is really where the market wants to be. And that begs the question, do we go higher from here? And of course, you know the long-term case. If you've been watching my videos, you know the long-term case. I think possibly the highest we could get would possibly be somewhere in the 426.17 range, somewhere in there before we roll over. It's possible we go all the way up there before we ever double bottom at 398.19. But if we were to do that, then we are going to see, is this the point where we fall off the cliff? Was this just a dead cat bounce? I really wanted to see us revisit that area and really make good progress from there. But that's not what the market wanted to do. The market is building structure, but has that structure been built on good volume? That's the question. And that is what has been perplexing me. So we've had to find a way as wolves, we have to find a way, and I have, to look at volume a little bit differently. So I've brought up the OBV volume indicator for us to look at on the daily, so we can have an idea of where volume is on its way to and what it might do. Okay? So you can see here on this daily that right now volume is in this ascending pattern. We had a brief cool off down to 9.62B. We are currently sitting at about 9.692B. And we are continuing on our way up. Now, there's two different patterns of the volume playing out here. And it begs the question, do we roll over soon, or do we continue up? We are in an ascending wedge, really. Excuse me. No, we're not in an ascending wedge. Excuse me. We are in an ascending, expanding channel, and we are inside, in the longer term, we are inside of this descending wedge of volume. And of course, in a descending wedge, if you break it, you tend to break out bullish. But is that really the case with volume? We know the events that are going to be happening. Let's just take a look before we think about the broad view. Let's take a look at our narrow view here, at our case that's playing out in front of us. Now, it's tough to know. I think tomorrow, I don't see why this increasing volume should necessarily be interrupted. If we do have a cool-off phase, I believe it'll bounce off of its support and that it will continue to head up to at least touch the upper part of this descending wedge, perhaps maybe at 9.741B. If we continue up on the same trajectory, perhaps 9.75B, somewhere in there, before we get a rejection. Now, we don't have to be rejected that soon. It could be a temporary cool, another bounce off to support, and then we continue to head up in our ascending, expanding channel here. And that might make sense because that could potentially bring us up to 426.53 on SPY, somewhere in there, before we hit the top of this, or just shy of that ascending wedge, and we roll over on the volume. So that's essentially the long-term case we're looking at. I think we have to look at this in the long term for now. It's very difficult to call this sideways action point to point right now. It's very difficult to know when we're going to break up necessarily. Now, I think based on this bullish engulfing candle, we might have a little cool off, and then we might really break up and rip. That's a good possibility. So that is something to pay attention to. That is more of the bull case. The bear case would essentially be we get rejected on the volume at that 9.744B, somewhere in there. Excuse me. Would that be correct? Maybe 9.754B, somewhere in there. We get a hard rejection there. We break through our support on that wedge, and then we come down and we revisit previous levels where we were before to at the 398.19, which would essentially put us on average at about maybe 9.678B, somewhere in there. No, that couldn't be right. It would have to be lower. It would have to be lower. I'm thinking, yeah, it would probably be the top part of that section. So perhaps somewhere about 9.56B on the volume. Somewhere in that range is where it would get rejected to. So that would be your bear case. But I just think with this bullish engulfing candle, I'm more inclined to say we see a small cool off, and then we continue to break up and try and finish out this pattern. It seems to be that this reminds me very much of when we were rising up on scant volume before. And that's the last thing I want to show you before we move on to a broader case here when we look at the volume. I want you to take a look back when we were really breaking up in this area before, right? So when we were trying to get back to the top of this cup previously, you can see we were at about average, I would say we were about 425.61, somewhere in there. Now it could go a little higher, a little lower, but you can see that the volume at that point was about 10.165B. So that's really where we're going to want to see it move back to, which would be the top of this ascending wedge. You would want to see that maybe if it's going to really begin to stabilize and rip higher. However, if we don't see something close to that, I think it rolls over very easily. Now it could come up to equivalency. The question is can we get it in? Can we get it in on the rest of this move up before we roll over? It's a wait and see game right now. It really is. This market has been pretty crazy, but I want to show you the broader perspective now. Oh, the other thing I'd like to point out is, and if I haven't yet, so we're approaching this fib circle here. This could lead to a further break up on Monday, depending on what happens tomorrow. Or it could lead to a breakdown where we revisit these areas and then we get a bounce. We'll have to see how that plays out. So that's something to keep an eye on. But now I want to show you a broader case here of what's been happening. I just generally want you to see our volume, even at these levels we're at right now, not very good, right? Compared to where the market was. It's really hanging about average, going all the way back to kind of the peak at 2020 before we saw volume just crater, right? And look at that difference in where we are now and where volume was then. Look at that difference back in 2018? Yeah, December 2018. Look, falling on the same exact spot with volume at about the 7.53B area. We're nowhere close to that right now. Nowhere close to that. We have so much potential corrective territory left to go here when it comes to volume dropping out of the market, especially as the Fed begins to tighten. You track that back, right? You track that back. We can go way back all the way to 2011 at a similar level of volume. I want to show you the weekly on this volume, though, right now. I want to take you all the way back to 2008 so you can see just how far volume can fall when you get one of these major corrections. Back in 2008, volume was sitting at about 7.23B. That's essentially where we've been prior, but that's not much higher than where our lowest point has been recently, back in 2018. So sitting at about 10.43B. We're hanging in there somewhere, right? So we're only a little higher than that right now. We had this major run up off more quantitative easing, obviously, but so my point is we can drop significantly. We can hit that 1043B again back where we were in 2018. That doesn't even count 2020. The volume barely fell off in 2020. I mean, you've got so much volume entering the market. It's crazy. So, but look at this correction in 2008, just percentage-wise. I want to show you the difference in percentage here. Look at this percentage move down in 2000. Of course, it's going to be difficult to see. Let me move this so it's not difficult to see. So let me show you that percentage move down. Excuse me. In 2008. 2008 correction, right? Percentage move down about 473.26% down in volume. We've had a W reversal building here in volume, and it looks like it wants to roll over now. And you look at, where were we? So, about the other bottom on that W reversal, when it dropped off again, was at about, from the top of 2008, because it had never recovered yet, it was about 408.83% down. Okay? Now, how much of a percentage have we recovered since then when it comes to volume? Well, let's take a look and see. We have roughly gone up in volume since the peak of 2008, since we recovered that and we've gone up further. We've come up about 152.44% when it comes to volume. And the moves down, okay? The moves down have not been anything nearly as drastic as 2008. You have to remember, the Federal Reserve has been propping up this economy since 2008. When we finally break, when volume finally breaks, how far down do we go? I want you to tell me in the comments section, how far down do we go on volume? Do we break? We go all the way down and break this W reversal in volume? Do we go all the way to the low of 2008? Is that possible? So let me know what you think in the comments section.